closer look at Oracle. That stock sliding in the pre-market after issuing $18 billion worth of bonds yesterday. The company said that proceeds would be used for general purposes, including buybacks and acquisition. At the same time, Redburn initiating coverage of the stock with a sell rating and $175 price target. Redburn believes the market is overestimating the value of Oracle's contracted cloud revenues, calling current market estimates a risky blue sky scenario that is unlikely to materialize. That's a quote. Time now for Options Corner. Joining us to take a deeper look at this chart, we've got Rick Ducat, the Duke of Data himself. All right, Rick, let's talk about the trends in this chart for Oracle. Though it's taking a step back today, I mean, it's really had a banner series of days recently.
Yes, of course, one of the seeming winners in this AI space that has captivated the market so much here. We can see Oracle up more than 85% during the past year. Tech is only up about 24% during the same time here. And one of the things that's most interesting to me about Oracle is that we can see that it kind of exposes that sectors can be misleading here. Look at the software sector here, XSW, up almost 27% during the past year versus the SPX up about 16%. However, if you take out Oracle and Palantir, that gives you this purple line. The rest of the 18 companies in the software sector are down about 1.3% during the same period. So really points to the importance of this AI space here for the technology sector and the significant potential disruptions here. So if we were to look at the chart more specifically here, we had a big push to the upside on earnings. Now things are retreating a little bit. The mark price is around 300 or so. So this is kind of a sea change for the stock here, and it's resulted in a pattern that many traders look for. It's kind of a bull pennant type shape here where we have two trend lines, one pointing downward, one pointing upward here. We're about at the lower boundary of this trend line right now at that 300 level. So the hope for this pattern, if you were bullish in this name, would be that after this brief retreat, price would stabilize at a supportive level and then continue on in the direction of the trend here. So that could be either, as I said, this 300 level or about 292. That's where we saw our lows after the gap up here. So if we were to overlay a couple other studies here, we can see that we are also right here at this volume node here. This is an area of heavy trading near 305 or so. We also have our short-term 9-period exponential moving average there as well. That comes in near 303.50. Now, one other thing to consider is our standard deviation channel study. Our +2 channel projects potential resistance also at the top of this area here near about the edge of that volume node area, near about 317. So that could be a further resistance area. Notice as well, RSI dropping out of the overbought area.
Okay, all right, great breakdown on that chart there. All right, so shares are a little lower in the pre-market, down 3.5%, but you mentioned obviously its performance year to date, especially how it compares to the sector or the S&P 500. You also mentioned that bull pennant flag. So what would be your approach for an example trade? Can you walk us through one, Rick?
Sure. So if you were looking at this pattern and you were hoping that it would be, as I said, the bull pennant type shape where you get the push to the upside here, unbalanced butterfly, +1 October 17th, 310, 330, 345, call butterfly at a 330 debit here. So we chose those strikes because they line up with some of our key areas here. 330 is roughly the old closing high. 345 was the edge of that potential expected move area. So we can see 330 max loss is our debit paid. 22 days to expiration. It would need a 4.4, 4.5 move to the upside to break even here versus a 12.4% expected move during that time period here. And one of the nice things about this trade is that it's a way to get better exposure, or rather a less expensive exposure here. If you were to just buy the 310 calls, they'd be like $17.50 at this point here. This way, you have a good deal of upside exposure here. Your max profit at 330 would be about $1,600 here. And if it does start to decline and overshoot that expected range, 345 was the edge here, you would still have a cap of about $170 profit if you do overshoot, which is an excruciating situation to have happen in a conventional butterfly where the profits start to drift away as the move is bigger than expected.
All right, thank you, Rick. Great breakdown there on Oracle and approach for an example trade. Appreciate that. That's Rick Ducat, our lead market technician.